Jim Cramer joins me on the floor of the NYSE. I'm Catherine Ross of TheStreet. All right, Salesforce, our real money stock of the day, reports earnings tonight. What do you expect?
Okay, there are two worlds of Salesforce. There's the world of how it's done over multiple years, and then there's the world of how it's done over multiple hours, the hours after it reports. There are a series of metrics. I'm actually doing everything from the rule of 40 to the new way they report billings that make it so that and there's actually a change in the accounting law too, that makes it so that there are people who jack it up the moment it reports, say from 415 to 420. And then there's a slow drip and then a vicious decline as the company gives this conference call. And that decline continues the next day as one or two analysts try to rationalize why it was a good quarter. And then you end up day 3 with a great buying opportunity. And if you think I'm wrong, take a look at Workday, because Workday is very similar. I mean, Workday, I was working over Workday this weekend in VMware and Splunk. Splunk actually opened up big. These all did the same pattern. You should look at the pattern. Only VMware held up. And the reason why VMware held up was because they guided up on every single line. The others guys only guided up on some of the lines, which is really extraordinary that you have these companies that are so big and they're guiding up on so many lines, but not enough to do the job. Salesforce trades at enterprise value of 5 times. Salesforce is actually cheaper than it's been. But there are people who, and I like the fact that Keith Block's in there as co-CEO, so that he's the closer of a lot of deals. And I end up thinking, okay, as a position that's owned by Action Alerts, traders stay away, please. It's too hard to trade, but boy, is it fabulous to invest in, which is one of the reasons why we're not a hedge fund, and why I think that if you don't own Salesforce yet, wait.
And what about the China-U.S. trade war? We're hearing reports that it might be coming to a close, which is not something, it's something that we've heard multiple times, and we're not seeing the market
what's
react.
happened is that there's individual stocks that are still reacting positively. I wrote a piece this morning, Real Money. American Express is up because people say, oh, you got 6.8 billion cardholders, and Amex isn't there yet. What a just white space for American Express. Catherine, my problem is this. We have believed that there's going to be a trade deal for so long that now that we're really on the cusp of the trade deal, people just say, I'm going to sell on the news. Now, that is too sweeping. There are many companies that will actually be able to do many different things if China opens up. Anyone who's selling because they feel the deal isn't vast and sweeping enough, well, that's ridiculous, because the vast and sweeping enough is something that those of us who have felt that China has not been a good actor in the world. Yeah, we want to punish them. We want them to change their ways. But if you own Caterpillar, you just want to sell stuff. And if you own Procter, you just want to sell stuff. And if you own Kimberly, you just want to sell stuff. And so for the actual businesses that do it, that are in China, this is very good. So I would wait till those go down. I wouldn't buy CAD here or Boeing up here because they have run. They're the most likely to be sold down, but then I would buy them. Remember, Caterpillar recently got a double downgrade. We've all forgotten why that is. Boeing is really breaking out because when you look at the structure of the Vietnam deal and the deal of the Airbus deal, where they lost the British deal where they switched, they didn't buy Airbus. What you realize is there's lots of earnings methods to evaluate these stocks on, and it's really important to recognize that there are far more reasons to own these stocks than not. So wait till they come down. I know my focus is to wait on something to come down, wait on something down, but take a look at a UNH. I said wait till that comes down. It goes down pretty much every day. So wait till it comes down, and then when it's bottom, you're going to get a chance to buy. That's what happens in this market. You get multiple days where a stock goes down, and then you get a chance to buy. And if you just decide to go in and just say, listen, I woke up and today I decided to buy Boeing, that's proven to be an incorrect way. So at this point, I like the market, but I want to see these stocks down before I tell people, the China stocks, so to speak, down, and then they're buys.
And what about Lyft's IPO? They officially filed. They're going to list on NASDAQ.
The first one's going to be good. The first 3 or 4 deals are going to be great. So you want to try to get as much lift as you can. The brokers are going to try to get it so that you're drawn in to all the deals, because the deals by the end of this skein will be bad. So get in there, try to get as much lift as possible, because the way deals work, is that the brokers all know they have a ton of merchandise to move. So what they do is they whet your appetite with some really tasty morsels, and Lyft will be a tasty morsel.
Do you still think, you told me previously on the show that you think that it's going to take away from FANG, as you say it. Do you still think that it will?
Well, FANG is running now. I mean, there's been a shift away from the Cloud Kings, as manifested by Workday's reversal, as manifested by my worries about Salesforce, and money flying in. I was doing some work on Apple while I was on the show. I mean, it's like, Apple is flying. There's a move toward FANG. It's kind of a rotation that's a little scary to me because it's based on nothing. Because when you think about it, the money into FANG, well, does that really make sense given the fact that FANG is not China with the exception of the AA? Use the old FANG, it's Amazon. They have no A. No China. But Apple is usually China. So just be careful. There's someone putting on a trade that's moving all these stocks. The market's very thin. And the move into FANG is a false one, but based on the chart. And the chart is always a difficult way to invest. Witness CVS, which had a great chart before it broke down.
Now, we talked about this a couple of times on the show, and I just want to reiterate that we want to start doing more educational stuff.
Yes.
And so I actually have an educational question for you today.
Sure.
And this is about the biotech space, because this is a space that you like a lot.
Right.
And I'm wondering, if I'm an investor walking into this market and I'm hearing you talk about biotech, but I have no idea what you're saying, what is one thing that you think that I should be looking at in this space?
Well, Charles River Labs, which is the one I'm going to suggest, Charles River Labs is they are the arms merchant to biotech. The biotech companies themselves do not have enough money to develop drugs. So you have to send to Charles River Labs, which, by the way, if you want to get a hold of them, you dial 1-800-LAB-RAT.
Yeah, you told me that last week.
But the biotech companies are funded to a level where they can do a great original research. And the reason why I'm suggesting Charles River Labs is because the FDA has changed under this new guy, on Gottlieb. Gottlieb understands both compassionate use, meaning that he understands that a lot of people would die if it weren't for certain drugs, so we should be more willing to approve those drugs. He also understands the cost of drugs, and what's happened is that we had more than 50 drugs approved last year, far more than usual, which is one of the reasons why there's such a big rush to own biotech. So Biogen, which is a biotech, buys a biotech, and Lilly buys a biotech, and Glaxo buys a biotech, and you're just seeing endless number of biotechs being bought, and that's because their approval rate is so high now, it's worth it. So I'm reluctant to say go buy a particular, because if I don't have Spark, if I don't hit the right one, Loxo, then if we have this big IPO rush, those stocks tend to get sold on an IPO rush. But I do think that Charles River Labs is a great way to play this whole revolution. So my advice, my educational tip of the day is, remember, always try to buy the arms merchants if you've got a big gold rush, because if we're just going to bank on the gold miners, we might be backing a gold miner that doesn't find gold.
That's a great tip. All right, Jim, we're going to head over to Action Alerts Plus.
Again, I'm focused on the fact that a lot of people were waiting for good news in the, as I said in my Real Money piece, waiting for the good news of China and wanted to sell ahead of others who they think are going to sell, and that's what we're experiencing today.
All right, we're going to head over to Action Alerts Plus because I hear that you have a new initiation, and I want to speak to you about that.
Indeed.
All right, guys, you can catch us at actionalertsplus.com. We'll see you tomorrow.